Hello, Oracles. Today we're going to talk about Tesla stock and dividends. No, Tesla has not declared dividends. They probably won't for many, many years from now. But I wanted to talk about the similarities between the Magnificent Seven and Tesla and where they're at, and what we've seen over the last 10 years, which we could potentially see from Tesla in the next 10 years. So, for those of you guys who follow me, you know that I kind of switched my investing strategy a little bit from really mostly all in on Tesla and high growth to kind of dividend and passive income. I realized that, especially with a potential recession coming, cash flow generation is really the most important thing you can have. When you look at companies that you're investing in, like a Tesla, you want to have a company that's going to have high cash flow generation. Tesla is amazing with this. They have great cash flow coming in. That's how they can stay sustainable. That's how they can adjust over time. They have a giant cash pile sitting on the side, and they also have this free cash flow coming in that allows them to build up that cash pile or be able to run their business however they want. Same is going to hold true for your own personal finances. It's nice to have that emergency fund on the side, that big safety cash pile, and then you want cash flow coming in. Could be from a job or whatever you have, but you want that cash flow coming in that pays for the normal bills and then anything else, and that allows you to kind of build and grow from there also. But if you're just looking at straight growth, you're at the whim of the market. It could fluctuate up or down, and you never know when it comes to the timing of what's going to happen with the stock. But that cash flow is going to just keep on coming in. So for me, I like to have that cash flow, especially if you're looking to retire or retire early. The way you do that is by having cash flow. I mean, you obviously need to have money somewhere to be able to retire on. Some people are going to build up their Tesla stock or whatever other portfolio stocks they have, and they're just going to sell off chunks of it and use that to pay for things. That's a great option. Lots of people do that. For me personally, I want that cash flow because having the cash flow coming in, especially when it's a growing cash flow over time, it's like having a job that gives you a raise. You're constantly growing more and more money. You're staying ahead of inflation, and you are able to grow that portfolio even more. If you've got children or grandchildren that you want to pass that wealth on to, you can pass it along. Versus in the other scenario, where if you're working on just selling off your entire portfolio to live on it till you die, then you're going to have nothing to pass on to your grandchildren and children. So that's kind of why I switched my strategy. However, it's not that I got away from Tesla entirely. When I start looking at the Magnificent Seven, you look at how most of them over the last 10 years were the stocks you wanted to own. They grew significantly. They gave some of the best total returns, which is inevitably what we are all out to get, is a total return. They give you the best total returns, and you could have taken that and shifted it into other stocks or just kept on riding with it. But what happened recently with several of them? You had Nvidia also paid a very tiny dividend, but Meta and Google just announced dividends. Now they're still small. It's not world changing. It's not going to change your portfolio. But if you had been accumulating those stocks over the last 10 years, you would have a significant chunk of shares of them. You would have gotten that appreciation from the growth of it, and you would now be getting a little dividend on the side as well. Assuming these stocks are going to continue growing over the next 10 years, you're going to get growth and you're going to get those dividends. Now, going back to that free cash flow, when companies are going to raise their dividends, it's based on their free cash flow. Nvidia just bumped it up. I think it was 150%. Have you ever gotten a 150% raise at your job? Most likely not. So you can get that from these dividends. Now, again, the amount is very small, but it's all based upon your share amount. If you've been accumulating over the last 10 years, you had accumulated at a much lower price, and now it's growing to where it's at. Same thing is going to hold true with Tesla. Yes, it has grown significantly, but we've seen this massive pullback on it, and we still have a good chunk of time. Many of us believe Tesla still has a very long way to run when it comes to the stock price appreciation and the growth of the company. In turn, that is going to mean free cash flow. So I can see and anticipate within the probably next 10 years, as Tesla has Optimus come out, gets robotaxis on the road, gets energy really moving, they're going to have a lot of free cash flow coming in. Typically, companies have options with their free cash flow. They can reinvest into the business, which is what Tesla and most of these growth companies are doing. They can do cash buybacks, which is buying stock back from the open market to thin the shares out so that this way the value of those shares is going to be worth more. Or they can pay dividends out to their shareholders. So typically when you do the cash buybacks, it's a great option because you can kind of do it as you feel is necessary, and you can kind of time it when you want to when maybe the stock price is lower. Dividends, you're kind of more, once you step into that realm, you kind of have to keep on paying them. So you want to be very careful when you do that to have the confidence that you're going to continue growing your business in the future. So again, Nvidia had already been doing it, but they just bumped it up 150%. That is now growing. Google just started paying. Meta just started paying. Again, assuming that these companies are going to be continuing growing as we have been seeing them growing, those dividend hikes are going to be significant. So while the yields on them aren't very high, you're going to get big growth on those dividend payouts. Again, when you look at a typical raise that's out there, you may get 3 to 5% in a raise if you're in a company that's paying you pretty well. When you're looking at inflation at around 3%, that's really only going to kind of break it even for you. When you've got dividend stocks that are out there, they're going to be bumping you up 10, 15, 20, 30% when it comes to their dividend raises. That means that you are going to be getting a raise on your income by that 10, 20, 30%, or again, in NVIDIA's case, 150%. Typically, when you look back at dividends paying out historically, early on in their dividend phase, they bump them up significantly early on because they usually start them small and then they want to grow them over time. And because it is so small, that percent increase can jump up a lot. And then it grows over time. We're probably going to see the same thing with Google and Meta. And I would imagine Amazon very soon is also going to start paying a dividend. Then you start looking at other companies. Apple already pays one, Microsoft already pays one. These companies are doing that and they're still in growth phase, but they're also at that point where you may think that they're near the top of their S curve and being valued as a value company, but they're really not. But they're kind of getting to that sweet spot of there's still growth, they're paying a good dividend, they're giving you a great dividend hike. So it's kind of a wonderful place of all of the great worlds put together in one. And while yes, there's going to be more volatility with these companies just because they are growth companies, the underlying factor of that cash flow generation is most likely going to continue going up. You look back at the payment history and the dividend history on the Apples and Microsofts, they just kept going up. When you look at a lot of the value stocks that are out there, the Procters and Gambles, McDonald's, Home Depots, Lowe's, a lot of these companies, you go back in time, going through the great financial crisis, many of them did not cut their dividends. Most of them actually increased dividends during that time, or they held them flat and steady. So, thinking about now comparing your dividend income to your job. Now, many jobs during the great financial crisis were lost. So, people had no income coming in whatsoever. Meanwhile, dividend investors, despite the fact that the portfolio value came down significantly for them, their income continued to go up when it came to dividends. This is why, for me, that light bulb went off, and I'm like, just in case we get into some very rough times, unless the entire economy collapses within itself, even during a bad time as far as the great financial crisis went, we still had companies increasing their dividends, thereby giving those dividend holders pay raises. So if I'm looking at a potential recession coming up, I still want to get that pay raise when it comes to the dividends. The awesome part about those times is the fact that when that value of the stock comes down, if you have your drip on, which is you're reinvesting those dividends, you're now buying that stock that you like at a much lower price with the money you're getting from that company. So it's almost like that company is buying you its own stock at a lower price. Phenomenal. This is outstanding. And I love to see that. So when I'm looking forward at something like a Tesla, accumulating these shares over the next 10 years is going to be so vital if you think that Tesla is going to pay out a dividend in the future. You guys can let me know in the comments below if you think that they will. We know that they've kicked around thoughts of a buyback, which they will most likely end up doing well before they end up doing a dividend. We might see that coming out, maybe when robotaxis start hitting the ground. Right now is definitely not the time that Tesla wants to be doing a buyback. But when you start looking at the actual financials, when we get through a rougher economic time and back to, good times like we've seen for the last 10 years, and I'm not saying that we're going to get down to 0% interest. That's one of the reasons why we saw such a great last 10 to 15 years. But even as, the economy gets settled and there's less, questions as are we going to get a recession or are we not? What's going on with the presidential election? All these things that we are questioning right now. Once a lot of that is kind of smoothed out and we're back to a more stable economic time, we can see that massive growth coming back again. So that's why I want to be prepared now. And I'm looking at these other stocks in the Magnificent Seven and saying, all right, If they've been doing this, Apple and Microsoft have been paying dividends for a little over 10 years. And then you start looking at the fact that we've got Meta and Google now paying that. Amazon's most likely going to be coming up. I have no doubt Nvidia is going to continue to raise their dividends significantly over time. You start seeing things like that. You know that Tesla, if they continue on the path that they are on, they will also be a company that's going to be paying dividends in the future. And when it comes down to it, obviously it comes down to say, hey, maybe Tesla decides that they're going to do 20 cents a share. So they're going to do 20 cents a share, multiply however many shares you have. That's what you would get paid on a quarterly basis when it comes to that dividend. So then you do that and then you just bump it up over time. Then you start working on compound interest over time. Let's say they started at 20 cents and then they want to bump it up by 50% the next year and then 25% the year after that. And then they kind of level it off at maybe a 20% hike every year after that. You're literally going to be getting a 20% raise on Tesla stock dividends every single year. Now, again, that's just numbers I'm throwing out there, completely arbitrary. I could be completely wrong on all of that. But when you look historically at a lot of these other companies, and again, NVIDIA with 150%, we'll see what happens next year with Google and Meta on how much they raise theirs, if they end up raising theirs. That is kind of the things that I look at. And we know that, past performance is never an indicator of future results. But when I start looking at the historical data that we've seen from a lot of these other companies that are now value companies, those value companies were growth companies in the beginning. They just hit the top of their growth. Now they grow at a much slower pace, but they still continue to pay out higher and higher dividends every single year. So if you believe that these companies, Tesla included, are going to be much like those other companies like the Procter and Gambles of the world that are going to continue to grow, and then even if they do hit the kind of top of that S curve and then just start growing slower over time, if you think that they're going to continue to grow over time, that means that their dividends will continue to grow over time as well. That is going to be a nice raise for you continuously every single year. And so when I run through all of the stocks that I have in my portfolio, I've broken it down into several categories. This here is the very high yield income that's coming in. Some of these do have some NAV erosion, so I'm kind of thinning them out. They're not really going to be here for much longer. They're just kind of producing some good income for me to be able to feed into these other stocks. These I do not drip. These up here, I use that money to buy other things. Now, these other things that I'm buying, these here are kind of a stable dividend income. So these here are going to be producing this. So the yield on these is anywhere from, lower end is about 3% all the way up to 15, almost 16%. These here, I'm now kind of doing a little snowball effect and I'm rolling these down, and I'll save my strategy breakdown for another time. But these here, I'm just slowly dripping in and I'm going to keep on building these up as that stable bottom line income that I've got coming in that could pay the bills, buy other stocks, kind of do whatever I want with. These are going to be my growth ETFs. So these will have a stable income coming in, but they're also going to grow. Now I've got the VU in here. This is the S&P 500. So these here are just going to grow over time, and they're going to have that nice dividend that's just going to continue to grow over time as well. This isn't something that I'm going to be living on anytime soon, but in the next 20 or 30 years, I can take this and I can either live off of this or I can have this to pass off to my son. And then these are all the different companies that I'm currently investing in with the basic same strategy as above. And there's really no cap that I have on these. And I just kind of follow them individually, see how they're performing, say, hey, do I want to buy it, sell it? I'm typically not doing a lot of buying and selling and trading. This is more of I'm buying and then waiting for opportunities to buy more at a different price. If I like the price it's at, I'll add more. I've kind of just been holding and let these all drip in. So these are, UPS, AbbVie, ExxonMobil, Coca-Cola, Pepsi, Starbucks, a lot of these companies that you are probably very familiar with. Maybe you don't invest in, maybe they're not exciting for you, but for me, it keeps my emotions down. I kind of call my whole entire personal Oracle ETF here like the lazy river of investing. No matter how much the market fluctuates, I see very little fluctuation in my portfolio itself because I have such diversification in it, and I'm really kind of focused on the income. So all these companies here, and then these are the companies that I own that are kind of growth companies that do not pay any dividends right now. So I've got Uber, Tesla, Amazon, which again, I think Amazon's going to end up paying one pretty soon. SoFi, I think in the future is going to end up paying a dividend as well. Palantir most likely as well also. And then I've got my cryptocurrencies in that lump as well. So down here, I've got my dividends and my current dividend payout, including my cash. And I have, a good chunk of cash that is sitting in a high yield savings, just getting ready. That's that cash pile that I was telling you guys about. So this is my cash pile here at just over 13,000. And now to be clear on that, of that, I only have about 2,400 in my actual portfolio. A lot of this is different vaults. I do have SoFi, love the platform. If you guys like the platform, click that link down in the description below if you guys want to check it out. We each get a little money from it if you guys sign up for whatever it is. But I have different vaults. So every single paycheck, I have money that gets put into different vaults. I've got, my next house that I'm going to be purchasing. I've got the emergency fund. I've got windows that I got for this current house. I've got my mortgage that goes into it. I've got my son's college that's paid for in there. And I am collecting interest on all of that. So, yes, the money that I'm putting aside for my mortgage, I'm getting paid interest on at 4.6%. It's pretty awesome. So then my income when it comes to the cash flow is about $460 a month right now. Again, obviously, I'm not going to be living off of this anytime soon, but this is kind of where the snowball kicks in. As I'm building this up over time, I'm going to end up seeing this growing more and more and more. And eventually, this will reach a point where this is going to be bringing in more income than my full time job. Then I can decide, well, what do I want to do? Do I want to stay? Do I want to go? And at least then I have the financial freedom to do what I want because I have that cash flow coming in. Now, I do have real estate. You guys have been following me. This is the value on my house currently that I've got. And this equity amount right here, and I just had my contractor out today to take a look at my addition about putting a kitchenette in there so I can start renting out the other part of the house. But then I can have that cash flow coming in. So again, I'd have cash flow coming in from real estate, cash flow coming in from my dividends. I've got cash flow coming in from this channel. I'm a Beachbody coach. I have cash flow coming in from there. And of course, my full-time job, which is my main cash flow at the moment. But I'm building up several other cash flow sources so that I can live off of that in the future and actually retire at a reasonable age. And so, of course, for total disclosure here, my entire portfolio, including the equity on my house and everything, is just over $86,000. Now, this doesn't include all of my 401k and stuff. This is just what I currently invest and have active right now. So there's the breakdown for you. I hope you guys enjoyed the video today, and let me know what your thoughts are on dividends. Now, again, there's so many different ways to get cash flow coming in. The market right now is actually prime for swing trading. My dad does that himself, doing great. Lots of people are playing options, doing very well on that. I'm more of I want to keep my emotions out of the market. I know full well from my history, swing trading, I get very emotional. It bothers me. It's just not for me. I can do it, and some of my growth stuff, I may swing a little bit here and there, but I'm so busy with work and everything else that's going on. It's just not for me. I would rather have something that I can slowly, passively take a look at, maybe add to. If I see something just not doing well, I can knock that off. I want to invest like a sloth, and I'm very slow. But again, there's people out there who are doing very well with options, very well with the swing trading, very well, maybe they're doing something else with gold, whatever it is. There's lots of options out there for investing. This is just the best strategy for me and my own personal style. You guys can let me know in the comments below how you feel and what your style is and what your strategies are for holding Tesla stock or any other stocks in your portfolio for the future. Thank you guys so much for watching. I appreciate all of your support. Have a great one.